Hi there, hope you're all doing well. So, today, as I've put on the title, the discussion here is around why proper financial management is key to your success. So, caveat to all of this, I'm not a financial advisor, I don't pretend to be. However, this is just me sharing my mindset around money and wealth and how I kind of do things and just how it set me up to be successful and be not thrifty with my cash flow. So, without any further ado, let's just get into it and why this is important. So the context around this is that I see and I work with people who they are business owners primarily, but what they're doing is they're building for the future. Now, what does that mean? That often means that they're building a financial hoard. They're building that golden chest of treasure for the future that they want to dip into in retirement or otherwise. Now, that's all good and well, but the problem I see with that is very often they're doing that for the future and it's a tomorrow activity. And I've spoken about this before, about not just focusing on tomorrow activities, but really living into today and experiencing things in today. The bottom line of that, and the reason why I say this, is because in the future, we don't know what's going to happen. We don't know what the future actually is going to be. We don't know if it's even going to happen for us because we just don't know what tomorrow will bring. So whilst we should have that plan, whilst we should work towards a tomorrow and have a plan for our future and all these goals and targets that we want to reach, we absolutely should have that. That's what gives us a lot of drive and motivation, but we cannot neglect today. So on one hand, yes, we need to plan for tomorrow. Yes, we need to be making sure we're setting money aside for tomorrow so that we don't struggle when we get there. But at the same time, we need to be living today and experiencing it today. And again, as I've mentioned already, this is something that I do help people with because I'm very keen to make sure that people don't utilize all their funds that they're generating now. Yes, they're saving for tomorrow, but they do make use of some of them now so they can actually enjoy their life today and they're not just waiting for tomorrow. Now, there is a flip side to this, and the flip side is there are those people who actually just don't generate enough income for whatever reason that may be, whether it's just not enough for what they're spending out on or just their circumstances. But the issue is where they're spending money that they don't have and they're not necessarily saving for tomorrow. So it's that balancing act of what are you doing to prepare for tomorrow versus what are you spending today. Now, it's good, as I've mentioned, to actually make use of the money that you're generating so that you can live today and enjoy today and do the things that you want to do. But you cannot do that in the neglect of the tomorrow. So this is very much that balancing act of making sure you're doing it in the right way. Now, there's lots of different ways and techniques and tricks you can use, I guess, to do this. And I'm just going to share what I've done. Now, for a long-term legacy type thing in terms of your wealth, there are a few different ways you can invest your money. Obviously, one is the obvious, which is generally you'll put that into a pension pot and that's sat there for you to draw down on in your latter years when you reach retirement age and you can draw down on them, and that's great. And there's a lot of tax relief around that, and I absolutely advocate, do start building up a pension pot. It's something that we all should have. I also would suggest, though, that we don't rely on this. So this is where we then start looking at alternative types of investments and particularly investing in assets and commodities. So these would generally be things like investing in the property market, real estate market, because year on year it's been shown that property prices on average do generally increase. Yes, we have market crashes and corrections, but over the last 100 or so years that they've been tracking this data, we can just see that property prices always will increase given enough time to do so. So that's a good one in terms of having an asset-backed investment. Others are obviously stocks and shares. You've got commodities like gold, silver, there's cryptocurrency these days. And as I've said at the start, I'm not a financial advisor. I'm not trained or qualified, so I'm not here to give you financial advice. These are just options that I'm presenting you that are available. So if you wanted to go off and have a look into these, absolutely do so. But I would 100% advocate do it with thorough due diligence. Make sure you know what you're getting yourself into, because investment is a fantastic thing to do and it can really build and generate your wealth. However, you need to do it the right way because it is very risky and you can potentially lose that money. So that's the caveat I will put around it. So that's one way of doing it to allow you to save longer term and to build that longer term. Another aspect is business. And again, I work with a lot of business people and I have my own businesses. And this is why I, again, advocate business as being such a huge element of what we do in our lifetimes, because what is business other than something that is just a vehicle that generates our wealth that allows us to live? And we cannot really have a life without any income. We cannot have a life without any funds or currency. It's just the way that our societies have evolved and developed. It's for fair exchange and so on and so forth. So we have to have some form of currency, generally speaking. There's different ways of generating that. You could be doing that through self-employment. You could be doing that through working for someone else as an employee. You could be doing odd jobs here and there. You could have your own businesses. So there's all these different facets of doing this. My preference is to have businesses that will do these for me, because when you set your businesses up correctly, and if you get yourself into the right mindset around this, what you can do is have your businesses created in such a way that they essentially become self-perpetuating. So you generate the income through the business, you reinvest a lot of that income into the business itself, whether that be marketing, staff, whatever it needs to be that continues to drip feed you that income into that business and generate that, so that it becomes a self-sustaining model. And when that model is there, when you have that right strategy in place, what will happen is your business will gradually start to turn over without you being involved in that business. So this is about, in a way, extricating yourself from the business. And what that allows you to do is it allows you to reap the rewards of what you're doing. It allows you to have something that will support you, in theory, for the rest of your days if you set your business up to do so. And again, there's different types of businesses, and not all businesses are suited to this. So certainly anything that's physical or labor intensive, generally that's not going to be a sustainable business if you're actively working in that business and doing the work for you. So taking the example of a builder. However, you could extricate yourself from that work and instead become a business owner. So maybe you've done the day-to-day laboring, and that's great, that's fantastic, but you get to that point that you can actually start to hire staff and have people do the day-to-day work for you, and you become an owner manager. And then you can hire more staff and you grow that into a bigger business. And what that will allow you to do is, as long as you have that mechanism that generates you the income, that generates you the work and the turnover, and it's sufficient enough to pay your staff, your employees, your overheads, your expenses, while still allowing you to have a profit at the end, then that is a model that allows you to essentially keep that business for the rest of your life. And that actually negates the need for the retirement discussion that always tends to come up, because again, people will work towards a retirement age and they neglect their life until that point. They don't enjoy what they're doing day to day. They work the majority of their days, they spend Monday to Friday, say, working the bulk of those days, having a couple of days off in between, the odd holiday here and there if they're allowed to. But they don't really get to experience the wholeness of what you can do in your lifetime. And then by the time they reach retirement age, let's face it, if you're retiring when you're 65, maybe even 70 or later, you may not be in the best physical health, which I covered in my previous video about why that's so important. So it's the same thing. You could be retiring at a point in your life that you can now experience things with the money that you've generated, but not be in a position to do so physically or mentally. So the key thing is to do it in such a way that you can start doing that now, and it's to get you there as quickly as possible, which again is something that I do help people with. But a very simple mechanism to do this, and it's something that's shared a fair bit, and it's something that I've always done, is essentially what I call hidden money stores. It's taking your income and hiding it from yourself. So what we'll generally have, whether this is business or personal, it applies on both levels. You have your income, so you have your main bank account, your current account. As I said, it applies on business level as well as personal. So what you need to do is you need to sit down and figure out what your actual expenses are on a recurring, repeating basis. Now let's talk on a personal level. That could be mortgage, it could be rent, it's your food, your drink, it could be your bills, your utilities, you could have car payments, fuel for that car, that vehicle, all these different things that are kind of always repetitive but a necessity in your life, shall we say. Outside of that, there are then those items that are more superfluous, the more fun things that we would do. So having the cash to go off and engage in activities, going to the movies, going to the cinema, going out, eating and dining out, that kind of thing. So you've got your essentials and your non-essentials there. And the way to look at this is to basically view where you stand with your income versus your outgoings. So if your income is sufficient enough that you're more than covering your essentials, and that's amazing, that's your first tick in the box. What we're aiming for though is to have that excess income. But the excess income should ideally be then after your non-essential outgoings as well. So the way that I've always managed this, and the way that I teach people to do this myself and guide them to it, is that you're not tying up money that you don't have in investments that you cannot access. So not to put these into long-term investments. That's when you're at a much higher level. But when you're just maybe starting out or at a low level, you're building your income or building your businesses, the smart thing to do here is to look at that income, look at what your essential expenses are, and straight away, as soon as you get any income, take part of that and move it somewhere else, whether it's a savings account or if you're with digital banking, a space or a pot, whatever it may be. So it takes it away from your main vision. So you don't see that money. It's as if you don't have it, and it puts it away out of sight somewhere else, but it's there to cover off these expenses. Then if you have surplus income, what you can do is you can look and say, well, what non-essential things do I want? Whether that's personal for going out and engaging in activities, or whether it's business related and buying, new machinery or equipment that you don't necessarily urgently need, but are good to have in your business that will help you grow, or reinvesting in your marketing or adding to your marketing, shall we say. What you then do is with that surplus income that you now have, you do the same thing. You assign that money to a separate space or pot or savings account, and ideally keep these things separate if you can. And what that will do is that will build your wealth up in the background, behind the scenes, where you're not actively seeing it. And it's just a matter of being mindful for this. So what that will leave you is a certain amount in your current account. Now in that current account, you will be left with enough money to cover whatever you need to do on a day-to-day basis. But whatever you're essentially left with, that is what is your actual surplus. So this is your surplus that you can have. It's your play money. It's what you can use to do the things that are maybe not on your essential or non-essential list. This is just your pot of money that you can use to go get a coffee, go down the shops and get an odd snack here and there, whatever you may want to do. And then when you have your bills and your expenses that are going out, you just simply move the money from your essential savings pot or account into your current account to offset that balance. And then that just means that you're never really at a shortfall. But because you don't visibly see that money, it's a bit of a psychological trick, is this, because it's not in your current account and you do not see that there, it means that you don't think you have it. And it's just a very simple trick. It is not that complicated, and it probably sounds too simple to actually work, but it's true that it genuinely does work for people. And I've seen this time and time and time again. It's worked for me and it's worked for others. I've recommended it too. So you need to understand where your income and outgoings are. That's the first step of this. And then just set up the process as I've mentioned there and get that done on a regular basis. And what that will do though, is that will allow you to build up this wealth in the background. Now it will start out small doing this mechanism, but as you get more and more income, that will grow and grow and grow. And what you're doing is you're pre-allocating money to savings and to other investments that you do. So when you're at a level that you have a high enough income that covers your essentials and your non-essentials, you can then start allocating a certain amount of money as part of your essentials pot to say, well, I want to add an extra few £100,000 here that go into investment opportunities or go into long-term savings pots, whatever it may be. So you gradually build up your essential pot to make it bigger and bigger and bigger. And one thing that I would always do, which I've not mentioned yet, is always put in a little bit more than you think. So always add on maybe 10 or 15% above what you believe you need. Now what that will do is two things. One is it will allow for any of the essential expenses to increase. So if you're personally paying for utilities or commercially, or you're paying for insurances, and these things do change and vary maybe year on year or month to month, it allows for those to increase gradually and slowly. So it won't really have much of an impact on what you're saving. But also if these things don't increase or actually they decrease, which is even better, then what you end up with is a slightly bigger savings pot than you originally intended. And that allows you then again to just gradually build up that wealth, and you just periodically review it. So this is an activity we should do on a regular basis. I generally do it once a month, but obviously actively within that month I'm still doing these things. But it's also worth reviewing what you're doing on a yearly and an annually basis, because there are expenses and are essential expenses that are annual. And again, let's talk from a personal perspective. This could be car insurance, car tax. If you're talking from a commercial perspective, this could be your leases, it could be your insurances there. So when it comes down to that, and if you're allocating money on a monthly basis, the simple trick there is just look at what the annual expense is and divide it by 12. And that's again going to tell you what that monthly payment is that you're going to move if you're doing this on a monthly basis into your offset pots. But doing this on a consistent and regular basis, it will drip feed these accounts and they will grow very slowly to begin with, because you're only going to start putting a little bit in, but as your income increases, as your turnover increases, and you can do more and more of this, it grows exponentially. And as I've mentioned, when you get to that level that you have sufficient, that you can then start using this for investments, you don't need that money, you're not going to urgently need it, and you have that plan in place and you know where your finances are, that's where you can then start investing in more long-term assets, whether that's buying and holding property, whether it's investing in stocks and shares a bit more speculatively, whether it's holding on to long-term commodities such as gold or silver. It could be anything, but it gives you the opportunity to do so. And everyone will start at different places. Not everyone will start at the beginning and not everyone will start towards the end. It just depends where you are in your own personal circumstances and where you are in your lifetime and your journey. But this is absolutely something everyone could do. Even at just a basic level, if you're looking at it and saying, well, I don't have a huge income at the moment, as long as that's covering your expenses, make sure you're covering those, and then maybe just put an extra 10% aside if you can afford to. The main thing is to be saving something on a regular basis as much as you possibly can. Now, bringing this back to the title of this video, which is, why finance is important to your long-term success. It's because we cannot be successful if we cannot live, and we cannot live without our currency and our finances. And this will apply now as well as tomorrow. So I've mentioned about living between today and tomorrow and having that imbalance. This method that I've just mentioned here, and there's only one way of doing your financial management, will allow you to build your long-term wealth for tomorrow, but also live today. And what it also allows you to do is not just living today, but if we put it in the context of a business, it allows you to invest in that business today. So that could be in marketing to increase your lead generation, through your lead generation, increase your sales. It could be on training, for sales training. It could be in paid advertising. It could be in investing in staff members. There's all these different things that we can do, but to unlock these opportunities, we need finance. But if we consistently do this and regularly do it, and we actually actively are progressing on this journey, then it builds up our success profile. And not only are we being successful then today, but we have allowed ourselves to be successful tomorrow. And that's really what I wanted to cover off. So the key point here is make sure you're not just being narrow-minded and blinkered and focused on what's happening today. We need to think about tomorrow. But similarly, don't just focus on tomorrow and wait for that to happen and expect that when it happens, we'll be able to do all these different things. We need to live and experience and grow today. And it's about getting that balance in place. I really hope that's been helpful. I'm going to leave it there for this video. If it has been, or you've got any questions, feel free to let me know and reach out. Otherwise, I will catch up with you next time round.